Alright boys, so in this video I'm going to be going over the gold trade that I took last night around 8 o'clock p.m. on literally Christmas Day. Yeah, it was Christmas Day last night. And my fault for the quality. I'm doing it, I'm recording this on my other computer. Just going to be a quick trade recap, so let's hop into the charts. So coming into what I was looking at yesterday, this looks like a lot. It's not a lot, I promise, once I start going over it. Alright, so let's go into replay mode real quick. Let's pull everything back here. Okay, so all this is gonna look kind of crazy right now, but I'm not even gonna get rid of it. I'm just gonna leave it up. So if we go into replay mode, we know that this orange line right here is what? It is previous day high. You can see it right there. That's the previous day candles, wick, previous day high. All right, perfect. So come back down to like 15-minute chart. What do we also see? See this unfilled 15-minute gap. This 15-minute gap that's getting filled. Oh, I'm sorry. That fucked up the replay mode. You see this 15-minute gap, true day open, and this huge gap that got formed off of the market open. So once you want to come down to the 1 minute, this is what I wanted to see. Go back and replay mode real quick. So we know we have that unfilled gap, that 15-minute gap. We also know that we left a huge gap down here and true day open, key levels, everything's down here. So let's let market play out real quick. What's it doing? What's it doing? Wait for it to take out that previous day high. Bang, we take out previous day high, and then what do? Put in an inverse fair value gap. Once I see we put in that inverse fair value gap, that's when I'm going to take, I'll get rid of it, my standard deviation. I'm going to take from that swing high to that swing low on liquidity sweep on that previous day high sweep. I'm going to take from the swing high to that swing low of that little micro move up on the swing. And then we are going to try and take an entry out of the 0.5 or the 0.79. So I was not really paying attention right here. I looked away for a second, and as you can see, we tapped a 0.5, and then we start getting dump works. That was your ideal trade right here. Stops, top, targeting them lows. That was a good 1 to 7 right there. But what did the trade that I catch? We keep playing it out, keep playing it out. I also know we have true day open down here. Also looking at our standard deviation, we have the -1 level, did not get hit yet. We have the -1.5 level and -2 level. None of these got hit. This is the 15-minute gap. Then if we go under the 5-minute chart, and also see what are we playing in. We just put in a 5-minute inverse right here. We are also tapping this 5-minute fair value gap. So we're just having a little 5-minute retracement to fill this 5-minute fair value gap, which you can also see. We took out that previous day high. We have that 5-minute inverse candle now. We have that change in state, and we put in this fair value gap. So once I see us put in this fair value gap, hold that 5-minute gap. I'll mark out that 5-minute gap so it doesn't get confusing. Let's just make it a key level gap real quick, just so you know. How that 5-minute gap is holding. Let's let market play out a little bit more. Okay, perfect. What happens? We pull back up into this gap that we created after the change in state. So what do I want to see? I want to see us hold this gap. So I'm going to mark up the blue line. That's just the top of the gap. I want to see us hold this gap. And then I take my short. As soon as we pull back into this fair value gap, I take my short. Stops were literally the top of this candle right here. So I'll make them up a little bit. And I was only targeting those 5-minute lows that we just put in, retesting that 5-minute gap. And then full TPs would have been this key level, and then true day open also with this. My full TPs, you'll see in the recording if you follow me on Instagram or anything, was right here. That was my full TPs, was on this low resistance swing low right before the 15-minute gap. And as you can see, what does price then do? Absolutely dumps to my take profit, securing me $400. And that was the trade I took. And if you actually wanted to hold down to that low resistance sweep in that 15-minute gap, you would have went, once we've seen this sweep, you would have went break even. So you would have had your stop at break even right there, risk-free trade. And then you would have seen price absolutely dumped into that 15-minute gap, into that low resistance liquidity sweep. And you would have got full take profit shit. I would have been up 800 times 3, 800 on all my accounts right there if I held this. But once we started dumping down here, I thought that was the push, so I just started trailing my stop. And then once we swept out this intermediate low that we put in, retesting that 5 minute, that is when I then trailed my stops in profit to that wick and got stopped out right there. But stopped out in profit, perfect trade, easy, almost 1 to 2 there, and that secured us an easy $1,200 on Christmas night. Yeah, okay, we would have made like 2,400 if we held down to here, but or 2,200, something around there. No, I think it was 24. Yeah, but it's okay. This was a perfect trade. Everything that I needed played out right there. This is my strategy. High time frame liquidity sweep. But what did we see? Previous day high gets swept. What did we also see? A reversal. Inverse fair value gap. Change in state. Pull back to the equilibrium. Discounted range. We see a dump off. We also get a 5 minute inverse. And then we also get a 5 minute inverse overlapping a 5 minute BPR. So you take that BPR right there. That's your entry in this 1 minute gap overlapping this 5 minute BPR. Targeting this key level, this green line. You could have been targeting like what I was targeting. Intermediate lows, key level, and then that unfilled 15-minute gap, which is also the -1 and -1.5 level on our standard deviation. Standard deviation is literally just Fibonacci and levels on where price is going to pull back to. So as you can see, once we took that swing high to that swing low of the standard deviation, pull back into equilibrium, that inverse fair value gap, absolutely dump, taking out that -1 level, taking out that -1.5 level, and filling that unfilled 15-minute gap. So that was a trade I took last night. Textbook trade. I'm not sitting here looking for crazy RR trades. Like, we're base hit scale counts. We know this. So I'm 100% fine with taking a 1 to 1.8 right there and securing an easy $1,200 on Christmas night. But yeah, that was the trade for today. Or last night, I'm sorry. Little trade recap there. And yeah, see you boys Monday, Tuesday.